The balance sheets present the main categories of non-financial asset by main type of asset, and financial asset and liabilities by residence and instrument. It also facilitates the calculation of important analytic measures, such as gross debt and net debt. The balance sheet provides a snapshot of the financial position or wealth. It is the result of past fiscal policies through the cumulative effect of transactions and all past other economic flows. We can compile a balance sheet for any institutional unit or group of units. We do, for instance, compile it for the general government sector and the public sector, or individual government subsectors. As a general rule, all assets and liabilities should be valued at their current market value. That is the amount that is either observed on markets or that would have to be paid to acquire the assets on the reporting date, adjusted to account for their age, condition, and other relevant factors. In practice, market prices are readily observable for certain types of non-financial assets and traded financial instruments, for example, equity and debt securities. However, several types of assets and liabilities do not have market prices readily available, and so, in these cases, proxies for market values are used. The balance sheet statement also includes two balancing items that are very important for analytic purposes: net financial worth and net worth. Net financial worth is calculated as the difference between financial assets and liabilities. Net worth is calculated as the difference between total assets and liabilities. Both these balancing items are a measure of the wealth of a government and the long-term sustainability of a government's fiscal policy. This statement should be developed for all countries, regardless of the basis of recording used. If data on non-financial asset is not available, countries can start with the financial balance sheet, that is, stock data for financial assets and liabilities, and then gradually add in the information on non-financial assets. Note that net worth can be negative for governments. The reason that governments can survive, often for extended periods, with negative net worth is that governments have the right to tax as means to finance their activities. However, future tax revenue is not considered as an economic asset in the statistical sense, and therefore not recognized on the balance sheet. Thus, financial institutions and other lenders are willing to provide funds to government, even if their net worth is negative, anticipating that future revenue will cover future debt servicing costs.